All righty. Good morning, ladies and gentlemen. We're approaching the lunch hour here. So do yourself a favor, pull yourself away from the chart action and take a breather. I've got my friend Tyler Wood from the CMT Association here. Tyler, there's a big, awesome event coming up, and there have been a lot of questions overall on what is a CMT. I heard one the other day, the guys just say, it's just another three letters at the end of the name, but it's
Yeah.
so much more than that. You guys did a really awesome video the other day on the CMT Association and really what it is to
Yeah.
really get into the TNA. But would you let people know just briefly on what type of resources and community that they're getting into when they decide to walk this path of a CMT?
Absolutely, Creed. And thanks for having me on again today. We have seen, as an association over the last 50 years, just a tremendous growth in the awareness for technical analysis tools in their more responsible use. So, yes, there are a lot of folks out there that talk very simplistically or just very short term about how you can use technical trading tools. And certainly, for individual traders, particularly intraday, using some of these concepts for risk management, stops, and trade decision making, that's very important. But we have always delivered education and credentialing to the professional community, to institutional asset managers, client advisors, the investment banks and research teams that are there. And so the CMT program stands for Chartered Market Technician, not country music television, but the Chartered Market Technician program is something that, as you mentioned, Stanley Dash and I talked about at length yesterday. So it's three exams, it's three letters, but it's really a lifetime of improved decision making for yourself, for your firm, for your clients. And so what we do in the program is go through a really robust and broad set of candidate body of knowledge. We test things like an individual's ability to synthesize indicators, price information, but also to bring objective rigor. So there's a lot of statistics and quantitative methodologies in the program as well. And that just reflects how the discipline has evolved over the 50 years that the CMT Association has been around. You touch on something that's near and dear to my heart. 12 years ago, when I first joined this CMT Association, all I knew was the fundamentals. That's what they taught us in business school. And I got to meet some individuals who were founding members very early on. So Ralph Acampora, Phil Roth, Louise Yamada would come into our headquarters office in the financial district in Manhattan. And they would take time to teach young guys like me about the tools that they've used in their profession. But also they shared just what an underdog story technical analysts have had and often misunderstood. They were sort of the original quants of Wall Street, meaning that they collected and curated all sorts of market information, price and volume, and in the futures open interest. Those kinds of statistics help them get a sense for investor behavior, the supply and demand relationships for individual shares in the equity space, or cross asset analysis. Intermarket approaches have been vital to CMT charter holders for the last 50 years. So the organization was really founded on this idea that we needed to stand up for professionalism, for ethics, for education and credentialing. And so the CMT program, the examination process and the learning objectives, those actually, they started working on them in the 1980s. The first class of charter holders was 1989. So it's still a very niche, a small group of CMT charter holders worldwide, over 137 countries. But when you compare that to other designations like CFP or CFA, those are very very prevalent across the industry, meaning they're sort of commodified. But at this point, everybody has those charters, and so the CMT program is a pretty unique and differentiated set of skills and abilities that our charter holders can bring to their firms and to their clients.
I love that. I love that. Now, Tyler, for someone that's wanting to pursue a career in the finance field, we know the CMT designation stands them out, but why does it
Yeah.
stand them out? I mean, CFA or any of the other, add on to it, whatever you would like on that, they're the more known, but why would someone want to take the minimum year-long commitment, year and a half long commitment to become a CMT? Is it Is it really something that's going to help them progress in their career? Are there career resources that the CMT community helps to foster for these people, either just getting, or if they've been in it for a while and now they want the designation? Are there resources like that for people in the CMT?
Absolutely, Creed. So first and foremost, on the content side, we certainly don't disparage fundamental data or fundamental analysis. You know, that bottom-up approach of understanding the company and where intrinsic value might be mispriced in the marketplace. For a lot of investors, adding some technical tools to their analytical or to their investment decision-making process has been tremendously helpful. They don't get caught in value traps when they run a momentum overlay. They're able to see relative strength between different sectors, between different securities, or even across asset classes. And for anybody who's looking at cross-asset or global investing, we actually had a guest on Fill the Gap. The new episode of our podcast is coming out tomorrow with Mark Darriott. And he commented on, his early start. He was a fundamental security analyst. He said it was very difficult from his seat in Toronto to meet with management of Taiwanese semiconductors companies, or to really get deep in Brazilian government treasuries. Those things that are not freely accessible from a fundamental data perspective, you can really improve your decision making by using technicals, and it's ubiquitous, right? We can use the same tools on any time frame, on any asset class, and any security. So you asked about the career benefits, and so all of our members hold seats in the largest investment managers and investment banks in the world, and that network is incredibly powerful. I've been a beneficiary myself, that typically once you see a job posted online, they've already got it earmarked for a few folks. So it's that professional network and having a community of folks that not only can you find opportunities together, but you're also helping support all of the charter holder community. So everything that we do at the association is for and on behalf of our members worldwide. And we do a lot of advocacy with employers, but we also do a lot of surveying of our charter holders. So folks who have earned the CMT report that within a year after receiving their designation, promotions, salary increases, those sort of career benefits are, we can sort of take those for granted. But the one that I really draw my eye to is this answer to more responsibility. And what that translates to is greater assets under management. We have a lot of CMTs who have found within that first year of having the CMT charter that clients have more confidence in their risk management and alpha capture process, that it's repeatable, that it's disciplined and rules-based. And firms as well have allocated more capital to fund managers with the CMT. And so that really stands out to us in terms of testifying to the integrity of the program and the value that CMT charter holders bring to the business. But of course, you don't have to take all that from me. We've got a lot of testimonials on the CMT Association website. If you head to cmtassociation.org/chartered market technician, the CMT program page has a lot of testimonials from dual charter holders, CFA CMTs, or folks who have been in the business for multiple cycles, and talked about sort of how they employ the discipline in their own investment process.
I love it. I love it. Well, now that we have an upper level idea of what the CMT section is, would you like to get into the charts? It seems that technology, crypto, and the rest are really starting to hold up in this wackiness, especially after the commentary we heard from yesterday.
Yeah, Chairman Powell, I thought gave a really good press conference. Not that my opinion matters at all, but certainly the 25 basis point hike is what many were expecting. That the Fed is still on the path to control inflation. I think that message came through really loud and clear. And they know that tightening liquidity means that there are going to be more pressures on the whole system from households and businesses not having as easy access, or higher interest rates on things like auto loans and home mortgages and those things. So when we see the rising rate environment, oftentimes it's our cyclical sectors that outperform, and we start to see things like commodities that tend to really do well in that rising rate environment. But it's not good enough to just have the theory right? We have to look at what's actually happening in the markets right now. And in fact, the story for commodities has not been great. What I have up on screen right now, Creed, is a cross-asset heat map. So for anybody who's familiar with GoNoGo charts, this top panel is the S&P 500 on a daily basis. When we're in these purple and pink bars, that's a no-go trend condition. So a composite blend of lots of technical indicators, right? We don't want to be pigeonholed to just a single piece of information. We want the weight of the evidence. So that's all calculated in the back end. We just have a simple color-coded chart that tells us the condition of the trend. When we're in these blue and aqua bars, we're in a go trend. Strong form and weak form. Blue is strong form of a go trend. Aqua is the weaker form of the go trend. So when we take the price action out of it, we can just look at the trend conditions and compare on a heat map. So here we've got equities represented by the S&P 500. We're in on a daily basis, a weak no-go trend. When we look at treasuries, the TLT, that's a 20-year T-bill, we're seeing the price of bonds in a go trend, which means the yields are coming down. Fascinating to see, even as Chairman Powell continues on the rate hike path. The commodities index, as I mentioned, we have really seen underperformance from a no-go trend across the USCI. And then the US dollar, and we're using a proxy. UUP is just an ETF that tracks the dollar index, has been in a go trend. We're seeing dollar resume that strength and that upward trend. That has also rolled over just in the last day and a half. And then on the bottom panel, we're seeing Bitcoin, the largest cap of the cryptocurrency space. So what Alex and I do at GoNoGo Charts and what we do with our clients is take a top-down approach. So to get a character of the market, even if you're not trading commodities or you're not exposed to crypto, that's just fine. But there's a lot of information from these other asset classes that we can use to our benefit in identifying where trends are going to persist in the equity space. So right now, government bonds, right? There's a little flight to safety, and crypto assets are performing well. I just wanted to pull up this chart, Creed, of the S&P 500. That interview that David Lundgren and I did for the CMT Association's podcast, Fill the Gap, that's coming out tomorrow. We talked at length about how markets can move in three directions, right? We can have an uptrend, we can have a downtrend, or we can be range bound. And our guest, Mark Darriott, gave a lot of very helpful commentary about longer term moving averages, longer term signals being very supportive, and shorter term showing a lot of compression, a lot of weakness. And obviously the crisis in some of these small regional banks really dampened what we were seeing from the equity indices at large. But when you take that in composite view, longer term, we've got a supportive, maybe a secular bull market still intact. Shorter term, we have a cyclical bear market that's putting a lot of pressure. And where we end up is compressed between those longer range and those shorter range moving averages. So I've got this weekly chart of the S&P 500 up here. This is all of 2022's damage that was done, lower highs, lower lows. But we have been consolidating sideways and in this range-bound chop for quite some time, which in essence creates some healing for the index itself, right? Over time, you can resolve some of that bear market damage. And on a weekly basis, we are in a go trend on the S&P 500. So longer term, supporting that thesis of a secular bull market. Shorter term, we're seeing a lot of compression from the cyclical bear, which might not be fully resolved yet. And then we can move on, right? Because we know that it's a market of stocks, not a stock market, right? So we've got to get under the hood. And this is our top-down approach. We start with the asset classes, we get into the indices, and then we look at the sector groups within the equity index. And so from top to bottom, we've got our growth equity sectors, technology, consumer discretionary, and communications. And we've got those cyclical sectors, energy, financials, industrials, materials. Those were the sectors that had been leading through the bear market territory of 2022. We saw defensives, right? Healthcare, staples, utilities really roll over as the market started to rebound in 2023. What we are seeing right now this week is that both defensive sectors like consumer staples, as well as technology and communications, are outperforming the benchmark. So these are relative ratios. It's each sector versus the index. And that's a really helpful technical concept, is that you can compare multiple securities or a sector to its index benchmark, or you can look at multiple asset classes on a relative basis. So even if the market is in a no-go trend, these might not be absolute uptrends, but on a relative basis, they are going down less or outperforming, even increasing. So when we look at this heat map, we can see that technology, but also consumer staples, are showing some signs of strength against this range-bound market. So we can dig in one layer deeper, Creed, and we can go to the industry groups within those outperforming sectors. So for sake of speed, we're going to look at just the technology sector and look at the industry groups within that are outperforming. And I just want to draw your eye right here. This is the semiconductors group, which has been in a steady go trend, outperforming the technology sector, which, as you'll remember, is outperforming the S&P 500. So when we do our technical approach from the top down, we want to see asset classes, how they're performing, sector groups that are leading the index, and then industry groups that are leading that sector. So we're narrowing in. If you're a fisherman, right, you want to fish where the fish are. You want to put probabilities on your side. So when we use all these heat maps, it's to narrow down our universe. And when we see in the semiconductor space that we've got all that outperformance, could pull up a representative like NVIDIA and see that on an absolute basis, we are in a go trend, right? We have been since mid-January. That retest, a little bit of contraction right around the turn of the year. This has been uninterrupted on a daily basis. And what really catches my eye is what we're seeing in the bottom panel, Creed, where we are in a go trend. We can look to the GoNoGo oscillator to see momentum confirm or diverge from that trend. So right here, we broke above the zero line. This tells us we've got positive momentum. The line went from green to dark blue, which means we had heavy relative volume. So we're in positive momentum in a go trend on heavy volume. That's sort of the sweet triumvirate, the three-part checklist. And what's great about trend following is that you can find momentum resurgence in the direction of the trend. So when you see activity like this, the pullback within an uptrend, is that the beginning of something terrible that it's rolling over? Is that the end of the trend for NVIDIA? Well, we try to be objective, not speculate. And what we look to is whether the zero line provides support. Did momentum come back to neutral, or did it get oversold? Did we reach into negative territory? Here we have held up at the zero line multiple times. And that's where you get these green icons. We love data visualization at GoNoGo Charts. So anything we can do to simplify, keep our eyes on price action itself. When we've got momentum coming back in the direction of the underlying trend, we got these trend continuation icons. And sure enough, momentum resurged, volume picked up. We're now at an extreme overbought level. That's the highest our oscillator goes. It's just -6 to +6. So we're at +6 on heavy volume in a strong go trend on NVIDIA. Doesn't get much better than that.
I love it. I love it. Tyler, is there any specific sector that you personally feel that, okay, right now as a technician on this is something I should keep a close eye on? What would be your one sector on that?
So I really feel like there is a lot of change happening under the hood, right? So when we look at the sector groups, historically speaking, what has been leadership through a bear market tends to lead in the next cyclical bull market. So commodities, materials, industrials, even energy and financials. I know that sounds like blasphemy right now to talk about financials, but our cyclical sectors really held up the best throughout the bear market territory of 2022. What happens when the market starts to recover is you see that momentum crash, meaning what had been decimated the hardest, technology, communications, consumer discretionary, they have the most to rebound, the most to gain in that shorter window. So it all comes down to time frame, Creed. I think what we're seeing right now is a preference from a lot of investors to stick with what had worked for them so well in 2020 and 2021. But where I would be keeping an eye would be on the industrial sector and materials, because what they had accomplished in terms of leadership groups through the bear market. I think if we're looking out past, into the second half of this year, I would certainly look to history as a guide that potentially those could be our outperformers again in this next cyclical bull market. But for right now, right, you got to trade the chart that's right in front of you. And so we look at the evidence that's right here. Technology is leading, consumer staples are leading. I think that for a lot of investors, some diversification is really important. And then the other comment that I would make is that you got to take the market one security at a time. So within each of these sectors, you will have leaders and laggards, and concentrating not just holding the sector ETF, but thinking about individual names within those sectors could be helpful to a lot of investors.
I love it. I love it. And speaking of different sectors on that, how you feeling about crypto?
I'm so glad you asked. I don't know the first thing about blockchain technology, Creed. I hope that everybody who has some exposure to the space is using some technical tools, because that's one of the most beautiful parts of technical analysis, is that it enables investors, even if you don't have inside information or a deep knowledge of, I don't understand railroads. I don't know exactly what Caterpillar or John Deere are doing in the new products that they're developing or how their management team works, but I don't have to. I can still be an investor in those stocks because I can see how the stock is behaving. That same thing for cryptocurrencies. I'm not a crypto maximalist. I don't know that fiat is going away or that central bank intervention is going to devalue all of the currencies around the world, and we're all going to be paying for things in coins. What I do know is when you can see an uptrend, right? This is a fairly large basing pattern that happened in the crypto space. We actually bottomed right when the FTX debacle came out. Sam Bankman-Fried headed to court, and we really didn't see a whole lot of further damage. This has been a pretty quiet rally in the crypto space, but significant. To me, above 30,000, we're off to the races, and there's still a lot of upside to gain before we get to those prior highs. But what I can see on a GoNoGo chart is that we broke into a go trend, had strong positive momentum. We picked up in terms of volume, and now we had this retest, right? Banking crisis, but we have taken off yet again. The oscillator is above the zero line. We're on heavy volume. And from a trend perspective, we're seeing the strongest form of the Go trend right here at 28,500. So I'm seeing a lot of constructive evidence on this chart of Bitcoin.
I love it. I love it. All right, Tyler, I want to be respectful of your time overall because you guys got a lot going on. If people want to find out more about the CMT Association or what you and the guys over at Fill the Gap have going on, how can they keep a hold of you?
So as managing director of the CMT Association, anybody is welcome to shoot me an email directly, tyler@cmtassociation.org. There is a ton of information on the CMT Association website, not just about the CMT curriculum and about how that's helped people in their careers, but also about all the educational activities that we've got going on. Tons of video archives, webinar series, the podcast that I mentioned, Fill the Gap, new monthly interviews every month, wherever you listen to podcasts. And then the last thing that I would mention is for folks who really want to get involved and expand their network, whether you are a CMT charter holder or not, I encourage you to join us in New York City at the end of next month for the 50th anniversary conference of the CMT Symposium. We will have the biggest and best asset managers, global macro analysts, strategy builders, indicator inventors, you name it. The men and women who have built this community will all be there. And I encourage you to join us as well.
I love it. I love it. All right, ladies and gentlemen, relevant links in the description below. And make sure to check out the CMT Association. I will be starting a small series. I'm calling this one the Journey to CMT because I myself am going to take this step as well. So you're welcome to join me on that. With that being said, Tyler, thank you for dropping some great knowledge points today. And I wish you the best in this wacky market and with everything else we've got going on. I look forward to talking with you again on the next one.
Thanks so much, Creed. I'll see you again soon.